With regards to the national retail sales tax, known as the fair tax or consumption tax, first of all, we're reducing the number of entities that would be filing a tax return to about a third of the number we currently have. That wouldn't take place under the flat tax. And also, under the fair tax, there would be less ability for fraud to be committed because it would take two entities. The entity that is, say, paying or purchasing the product, paying for the service, and the entity that is remitting payment in the way of the tax to the federal government.
Well, all right, unexpected, but I think I can handle it. I think the fact that first of all, the fair tax is a great idea. And I don't mean to belittle it and say that it's just an idea, but the bottom line is we're putting a pretty big trust in government to say, okay, well, for now, let's go ahead and repeal the 16th Amendment, and we promise we won't ever do anything again that's going to be anything like it. You know, that's pretty much the hardest thing for me to follow. And quite frankly, I mean, a flat tax, they're both equally great ideas. And I really only think, I mean, I don't really think anything other than time is going to really show us, quite frankly, whoever becomes president is going to play a pretty big role in it and what happens in Congress. But as far as right out of the gate, a flat tax, in my opinion, is more easily applicable, I guess you could say, to income earners in the country.
As always, the discussion of flat taxes and fair taxes generates a lot of... Very briefly.
I'd like to add, though, if we went to a fair tax, we would also keep the federal government out of our financial affairs. Whereas with a flat tax, we end up still having to fill out tax forms. With a fair tax, there are no tax forms to fill out. And we will also be able to see more people spread out rather than just people who are voluntarily filling out the forms.
The risk of incurring anyone's wrath, you still verifying what your income is would have to take place, and that's where, you know, Hugh's point and several other points have been made. You want to say something?
The frightening thing to me about the flat tax is you still have the definition of what's income. If you, for example, with an oil company, would you look at gross income or net income? There's a vast difference. A corner convenience store, gross income or net income? His gross income might be $1 million, but his net income might only be $25,000, $30,000. So there's a lot of definitional problems there and calculation problems. That's the problem that you run into with a flat tax. And I think going with the fair tax, you could avoid some of those problems. And I think you can more easily get rid of the Internal Revenue Code and the Internal Revenue Service by going with a national sales tax. And that's...
So Hugh, I mean, this brings us to another question. Are you now supporting the fair tax instead of flat tax?
Let me tell you something. I'm ready to bankrupt the damn thing if we can get rid of the Internal Revenue Code. It is such an abomination against our people.
Along the lines of the flat tax, I would encourage people to look into a great proposal that came out of Congressman Paul Ryan's office. If you go to his website, mail.gov/Ryan, Congressman from Wisconsin has a great proposal. A bill that would allow you to stay in the current system or go into an optional flat tax system. So you can stay in the current system with all the deduction and complications that come with it if you think your deductions work out, or you can opt into the flat tax system. We think this is a pretty viable way to transition towards where your tax are only one rate.
It's okay. It's okay. Calm down. Larry, obviously, again, we're going to go back to you for this one, and anyone else that wants to comment on it, but please describe or explain how a consumption tax might be implemented. In other words, day one, you start paying the higher sales tax, but you haven't accrued the income to pay for the tax. So how would you transition into this new tax plan? And anyone else can comment.
Well, first and foremost, say somebody has an inventory of $1 million worth of products that they bought under the current system. They would have to exhaust that inventory before they would switch over to collecting a national retail sales tax. So essentially that $1 million worth of inventory would be sold without any kind of national retail sales tax being applied, because they have purchased that under the old system, whereby there was roughly, on average, a 22% embedded tax. So that would address the idea of an inventory, and you would have a period of time. And of course, it's not like they're going to suddenly do away with the IRS the day that this fair tax goes into effect, because there's still some proceedings, some matters with regards to some outstanding balances due under the current system that would have to be resolved. So it's, unfortunately, we can't simply turn out the lights on the building that houses the IRS and do away with the 100,000 or so employees on day one.
Let's go for day two.
Yeah, that sounds good.
Well, a lot of this talk about flat tax, remember this, most of us who are working for a living are already paying a 14, 15% flat tax. They call it, if you're working for somebody else, they call it FECA. If you're working for yourself, they call it SECA, S-E-C-A, Self-Employed Contributions Act. And I call that sucker tax. Now, that is a flat tax, folks. I don't make over $85,000 a year, or 90, or 100,000, whatever it is. I quit maxing out about 40 years ago, I think, 25 or 30 or 40 years ago. Now, that is a flat tax, folks. If you're going to add another flat tax on top of it, if you're going to add 22% on top of my 14, 15%, wait a minute here, 22, 32, whoa here, something wrong here, and then state income tax, whoa, I don't want that deal. Can you add that up? 22, 14, that's 32, 30, whatever that is, 36, and then North Carolina, 40, whatever I'm looking for my passport, people. France is not that high. Now, this is what I'm telling you. And then they come along and they start defining what income is, and they start redefining your income to include income that you have already paid taxes on, which they've done this with your Social Security, you know. They started taxing our Social Security that we have already paid taxes on again. That ain't very nice, I don't think. What question was I supposed to ask?
I think you answered all of them, Hugh. One of the questions that is out there is, why doesn't Wall Street support tax reform? And as a former broker, I would say that Wall Street doesn't care what the rules are. They're going to make money regardless. And so and that's why they can make money in declining markets and increasing markets, and it's very fascinating. But if anyone else would like to chime in on that one. No? Oh, no. Here we go. Okay.
I think Wall Street works to address threats, and actually right now they've got the bullseye right on them. Democrats are looking at private equity as their golden goose for their grab bag of spending that they want to go forward with. So they will be involved in the tax debate, Wall Street, because they recognize that the current Congress, likely to remain the party in control, has them in their crosshairs. So they don't ignore tax reform completely, and they will be mobilized for this fight.
To say one?
The moguls on Wall Street have lots of money. Money drives Congress, people. Is that something new to you? They're going to tell them what to do. The current code, the current Internal Revenue Code, is so complicated that you and I can't understand it. And they got them lawyers that really do the writing for them. Do you believe it? And they push rods and pull strings for the big companies and for the foreign interest and for the special interest